show you how, if you're a payroll person, a payroll provider, a tax professional, of how that we can get what we call the advance payment for employer credits as soon as possible. I'm going to be going through Form 7200, when it applies, doesn't apply. I'm also going to tell you that when you file your 941, your 943, your 944, that you're actually going to get part of the credit there. But if you don't get it all there, then you're going to file this Form 7200. It's not required to file. The only time you're going to file it is whenever it benefits the employer to get all of the credit available whenever the regular payroll reports will not get it. Let's go and get started on this. And so we'll go to the first slide. Looking at the first slide, it's the advance payment due to Corona-19. The important thing is again, in where we're at in the storyline, we've done their 941, we've done the 943, the 944, as I've mentioned. And whenever we calculate it, then we want this, whenever those forms do not get all of the benefit of the credit. The dollar for dollar credit will cover the definitions later, but you will file this form to get more money back immediately at the end of a quarter. And going through this, it applies for quarter two. Well, actually, it applies starting in March, but it goes through quarter 1, 2, 3, and 4 for 2020. We need to look at additional. We'll cover how to file, where do you file at, and we're actually going to go through a line-by-line instruction on the prep. We need to be able to explain this to our clients today. Real good example before we jump in the detail, and what caused me to do this. I'm in tax season. And I'm getting so many calls. I can't keep up with the calls. Last night, I was having people saying, call me whenever. I was still talking to people at 11 p.m. And so the whole purpose of this, $2 trillion that has been passed is to get it to, in this case, the employer as soon as possible. One of the calls I got really stood out, and it was a client. It was the sawmill business. And I also had it from a trucking company. And what the client's saying, they're in a panic and they're going, look, this new paid leave, which I covered in another video, this family, the expanded family and medical leave, and this, what we call the retention credit. How do I get that money? Because if I don't, I'm going to go bankrupt. I'm going to go out of business. Well, in a video that I did for the paid leave and the retention, I tell you your requirements. But in this video, I'm going to tell you how to get the money back from the government. So let's go ahead and proceed on. We've got a few new terms, and the thing I look at, I'm going to lay my pen down here. But in these, and don't get caught up in the new terms. Don't get caught up in all the acts. We're literally going to walk through the form, the instructions, and I'm going to take the jargon out. This is just get down and dirty. How do we do it? But we have to look, part of this, we rely on the Family First. And in the Family First Act, we're going to be looking at the retention. We look at the emergency paid sick leave. We're going to look at the expanded family and medical leave. We're going to talk about wages and how within these three acts it all integrates. And then we'll also finally look at what they refer to as the CARES Act. So what I've done in this presentation is, instead of going through each one of these acts separate, which I've done in other videos, what I want to do is strictly, let's do the tax return. So the purpose of the Form 7200, again, is to get that advance payment. This is the advance payment for the tax credits for the qualified sick and qualified family leave, and also, importantly, the employee retention credit. See, in the laws, all those acts we just looked at, I, as a tax professional doing payroll for my clients, my employers, these are actually here the three areas that we're responsible for. We hear about this SBA loan stuff. That's not part of our tax. That's for the banks to take care of. But I think what I want to do here, again, is to say, here's our role. So the first thing you're going to do is you're going to do the 941. You're going to do the 943. So in that case, what happens is the fact you're going to complete these forms, and if they can get the full credit, the dollar for the employee retention credit, what they call paid sick leave pay, the 80 hours, the qualified family leave, that 80 hours, or the 10-week period, what will happen is that if we don't get all of the money due on these credits through our 940, 943, and our 944, the annual filing, then we'll do the Form 7200. So our first rule is, if we have enough tax liability on our regular quarterly reports, then we're going to be able to stop. But I feel like we're going to have many, many times, more than we might think, that we're going to have to go to the Form 7200. And literally how they've shortcutted this, when we get down to how to file it, we'll be able to fill out the form and literally fax it in. That's quick. We're not putting it in the mail. They don't have time to set up an electronic e-file. So the best way to do it is file in the form. The other thing, in summary, I got to say, when you apply for this advanced payment for the tax credit on the Form 7200, if you don't get it, you still have a second chance at the end of the year. What the guidance says is that at the end of the year, you're going to reconcile all of your reports, and if you still haven't got the credit then, you're going to get it at that point in time. Also, there is no such thing as an amended 7200. Again, this is to literally like give a quick fix. Our employers need their money now because they've paid it out, and so we need to get this back as soon as possible. The other thing, this last bullet on the slide, it does not apply to SE. It does not apply to SE. Just real quick before I leave this, I just want to say, let's say at the end of the quarter on their 941, they have a $5,000 tax credit coming their way, but the payroll tax liability is only $3,000. To get that $2,000 difference, we're going to file the Form 7200, fax it in real time, and say, give us our money back to our employer. That's why we're doing this. Let's go on the next slide. Who may file it? Businesses and tax-exempt organization. Pretty well, tax law has its exceptions, but for the most part, I can tell you, I believe all my clients are going to be able to file this form. It's for if you have less than 500 employees. And this seems to be a theme throughout, if you look at the Payroll Protection Program, which is over under the banking area, the SBA, they key off 500 employees. Here we're also going to key off 500 employees. So the presentation forward, unless otherwise noted, we're talking about a qualified business or tax-exempt organization that's under that 500. The next bullet on the slide is we're required to provide sick leave wages and qualified family leave. In my video I did on that, it's called, the word required is so critical, because if one of our clients have an employee come and say, I want to take sick leave, and if they meet the requirements under the what we call the Paid Sick Leave or Qualified Family Leave Act, they cannot discriminate. They have to say yes. But my point is, this is not an option. The employer has to provide the sick leave. And there is an exception that I cover in that presentation, but it's on very small employers. But I think in saying that, this is a dollar for dollar credit. So I can tell you, in my office, I qualify for the exception. But if one of my employees approach me with it, number one is I have to display the requirements, and I am going to provide it because I'm going to get reimbursed. And I think that's the key. Provide, and that why I'm pausing here is on this slide here, the word required. I can't say enough. I mean, this is critical. You have to provide this if your employee or your client's employee meets this. It does not include government entities. Moving on, we're looking at employers who also get the credit, qualified health plan expenses, employers share of Medicaid, Medicare tax on qualified leave pay. It also covers qualified leave. And here's your date. This paid sick leave and extended family medical leave is covered from April 1st, 2020 through the end of the year. So we could have this going on. It could be, we could have an employee qualify in April. We have an employee that qualifies in June. We could have 2 in July. So we've got the tracking that we need to do, but the important thing is we could be filing this Form 7200 quarterly throughout 2020. Now let's look at the Coronavirus Relief Economic Security, the CARES Act, and this is a refundable credit. So I'm now going to leave the paid sick leave and the expanded family and medical leave, which is a separate period, a separate act, that again, it covers April 1 through December 31st. But if we look at this act, this is a refundable credit, a refundable employee retention credit. So what happens is this, you get a credit for 50% of the qualified wages from March 12th. Note the date, please. It's different than for the leave. So this is to retain the employee. And there's certain requirements the employer has to meet. So right now we got whenever the employee is on sick leave, but now this is a credit for whenever the employer is trying to retain their employee. It's maximum of $10,000 per employee per calendar quarter. But the other part is this last bullet, and that is, this is based on each quarter, any quarter that the employer, if you're the employer or you're the payroll or tax professional providing this service, the payroll service, then what happens is that employer, if they are fully or partially suspended at a government order, or they had a 50% decline in gross receipts, it's an or, not an and, then they qualify for this credit. And again, in another video, I cover more in the weeds, so to speak. And that, when we actually get to the Form 7200, I've got a Form 7200 laying here. It was in draft form when I was putting this presentation together, but as of this morning, we do have the actual final form. And I'm going to go through that in just a moment. But the important thing is that the 7200 form really comes down to 3 things. And I'm stopping here because this is the 3 things. There's a line on there for the refundable employer retention credit. What's the wages? There is a line for what I call the qualified sick leave, and then there's one for the qualified family leave. We've now defined all 3 of them, and that's the 3 lines that you're going to put numbers on the Form 7200, again, whenever we cannot get all of the credit back from tax liability in that quarter. Our test for, and again, we're talking about under the CARES Act, the retention, we're going to look at employees, 2 sets of rules here. I told you it was for 500 earlier, less than 500 employees, and I said at any point in time the rules were different than 500, I would point it out, and this is where it changes. This is for employees, there's 2 rules, for one that is less than 100 and one that's greater than 100, but under 500. So looking here at the slide, the rule for 2019 employees, the credit is based on qualified wages paid to all employees in that quarter. So you have a look back to 19. If it's the average is greater than 100 full-time employees, full-time employees, then the credit is based on qualified wages to those employees not providing services due to the COVID-19. Again, I'm overviewing the rule. In another video, I actually go through how to calculate, etc. So it's important here to learn what our quarter base is. And just, I think a really big note, and I actually do a video where that I do a flow chart. And why that's important is that in that flow chart, the first 2 things that I flow chart is what we've discussed up to now. And that's I'm just going to call the sick leave, the family leave, that is based on wages. Okay. Then we go to the retention credit. That's based on wages. And another video I did was on the Paycheck Protection Program, and it's based on wages and employees. Then there's another one under the CARES Act that it's the emergency disaster injury loan. So those last two are loans through your bank and or SBA. Well, what happens is all four of them are based on some kind of wage definition. So I want to say this is what's important and why I'm pausing and telling you the four different ways that wages can either get a credit back for payment or get a loan that in the end, part or all of it can be forgiven. But here's the thing, critical, no double dipping. So here, no employee retention credit if the same qualified wages were used to receive a credit for sick or family leave, and also for the small business interruption loan, like the Paycheck Protection Program. No double dipping, and it makes sense. So again, the four programs that are available for you, the employer, or for your client that's the employer, then what happens is please watch double dipping. And again, I cover a flow chart with all four types. Two of them, remember, you and I as payroll or tax professionals do. The other two, the bank and SBA do. But we're going to have to, when we fill out these forms, we're going to have to know, did our client use any of the wages in our quarter that counted toward the forgiveness of debt on the SBA loan payback? Well, if they did, we can't use it here. No double dipping. And I think that's so important. And I think it's that we have to ask more questions. Part of, if you're the employer, the payroll service, the tax professional, you're going to have to do your due diligence. And in our office, we're going to help our clients track which one qualifies where. And this is kind of unusual because as a tax professional, I don't normally get over into the banking and SBA. But again, there's a separate video on how those integrate, and please look for those. The next slide, we're going to talk about the advance payment. The retention employment tax equals the advance payment equals the qualified wages and retention credit, okay, federal income tax, employee share of Social Security and Medicare tax, employer share of Social Security and Medicare tax. That is the qualified for the advance payment. If again not enough on our 941, our 943 or 944, then we're going to file a 7200. The question is, what happens if I file a 7200? Then the 7200 is only 8 lines long. It's very straightforward. But then when we get back to the 941s, the 943s, 44s, we're going to reconcile that on these forms. How you reconcile, there's no guidance at this point in time, but what it appears to be, you're going to reconcile that for sure by the end of the year. Filing the form, here's the fax number. Very important. You must also keep documentation where it says keep records for 4 years. The documentation to show how you figured the amount for the qualified sick and family leave. And you've also got to have documentation to show how you figured the amount of the employee retention credit. Again, you're going to keep those records. You're also going to have documentation to show how you figured the amount of qualified health expenses. So each of these areas, you've got to keep documentation for 4 years. And the reason why is because normally, you normally have a shorter period, but in this case, they're going to be looking for how much our client or you, the employer, whichever, comply. And again, this is all driven by quarters. Here's the form. I've divided this form up into actually 3 parts. This is the top. It's a 1-page form. It's Form 7200, advance payment for the employer credit due to COVID-19. On this page, it's pretty well the same standard stuff. The only thing I want to point out is over here. But where I've circled, we've got to check a box which quarter are we doing this for? Was the $7,200 for the April, May, and June? Or was it for July, August, and September, or the last quarter? And again, this is part of the IRS as they enter these faxed in forms. They're going to be able to reconcile with what period. And so then when you reconcile at the end of the year, they're going to be able to see that. So a couple of final notes. On part 2, line 8, you've now taken 4 minus 7, as I just mentioned. But here's the key. If it's 0 or less, don't file the form. The only time you file a form, there's no requirement to file this. If you don't file it and the number is greater than 0, you've lost that credit. But if the form on line 8 is 0 or less, so you could have a negative number, then don't file the form. Don't fax it in. You've already got the full benefit of the credit on your regular payroll filings. And then finally, what happens is that you've got to, if you're the employer, a responsible party, just like under payroll, needs to sign it. And if you are actually the paid preparer, then you would sign accordingly. And the little arrow I put on this slide right here, again, can't say enough. How do you file it? You got a fax number. So that's real time. And I hope out of this presentation, what you've really got a feel of is, in summary, kind of in recap, number one, the Form 7200 is whenever your client, the employer, or you, the employer, have not got all the benefit from your regular payroll. In other words, your payroll tax liabilities are not greater than your due credit back. You're going to do that. And the other thing I want to say, I keep referring to employer. There's a lot of large employers out there that have, a great, department. But if you're that small client, like most of my clients are, what I'm going to say to you is, please go to a tax or payroll professional to do this. I can't reiterate it enough. It's complex. It's a short time period, but utilize that tax/payroll professional. And if you've got one, take this to them, take the video to them, or tell them where to go find it. But if not, be sure it's a qualified tax professional. And go to irs.gov and they tell you that. And I'll give you, for example, I'm a partner in a CPA firm. I speak nationally. I associate with other associations. I'm a member of organizations. What that tells you, I'm a member of the National Association of Tax Professionals. I'm a member of AICPA, American Institute of CPAs, the Missouri Society of CPAs. See, that's how I stay current. So again, I say to you, if you have questions or you just say, hey, I need somebody to help me, please go to your local tax professional, because it's important to get the money now. That's the most important thing you can do. This is what's going to keep you, the small business, or to help you, the small business, stay in business and also take advantage of these credits. Thank you.